Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, March the 21st, first day of spring. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that you need to take a look at this disclaimer because this is telling you that I don't know your risk parameters, so therefore what I'm doing may not be appropriate for you. So take what we teach you and put it into your portfolio in your own way. Please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with the overall markets. Talk just a little bit about the economic data because that kind of is going to lead us into the overall markets here. So across the pond, nothing really to see a whole lot of, other than in Great Britain, unemployment rate downticked by tenth of a percent to 4.3% from 4.4%. So good for the overall economy there. Then we got Great Britain. Industrial order expectations came in at 4 versus 9. Now, this is what we were talking about yesterday with the overall economic picture, how it seems like we're starting to see a little bit of a slowdown across the pond. Therefore, that should drive prices for the dollar to go higher, right? Now, that being said, let's get into the economic data here in the United States, and continuing along that theme, we got existing home sales coming in at 5.54 million units sold. Existing home sales was expected to be 5.41 million, so much better, about 100,000 better than 130,000 better than what was expected. That is good. Could be that people are jumping off the porch right now because they see that the writing's on the wall that the interest rates are going to go up. And as interest rates go up, you can actually afford a smaller home in a sense. So that your extra payment going to interest rather than in the size of the home. So we're going to probably start to see some downward pressure on some of these home prices as well. So because as interest rates go up, you can afford less house. That drives down prices. All right, on to crude oil inventories. Came in at a drawdown of 2.6 million barrels, expected to be an increase of 2.6 million barrels. So a miss by over 5 million barrels in a sense. That driving the price of crude oil higher today by over $1.70 right now, and touching on this trend channel that we talked about. Now, you know, I don't like to draw a bunch of lines on my charts because they get a little bit messy, but one could actually come in and say that if we drew a line right here, that this is a breakout of a triangle pattern with me drawing this line here. If we drew a line right here, I can't, for some reason my charts aren't showing up right now. There we go. We can get the drawings now. So let's see if we can find a trend channel or a trend line here. So if I just sloppily draw a channel here, you can see that we have our triangle pattern here breaking out yesterday above the 23 Fibonacci level and off to this old trend channel line. So this is a flag breakout to the upside. All right, that's probably the right move with that drawdown, because actually we've been talking about moving from one bucket to the next, and one would expect that crude oil inventories are pulling back because they're just building over there on the distillates and the gasoline and stuff like that. Well, that being said, distillates, gasoline, and Cushing were all down as well. So it's not really that same scenario we were talking about where we're kind of trying to hide that off in the way. These were all drawdowns more than expected. So therefore, it is a proper move, for lack of a better phrase, for crude oil to be moving higher right now. But one thing to note, that it is testing that trend channel from, you know, the almost last 8 months there, and then we created this flagging pattern at the top. Now we're breaking out. So on to gold. Gold moving higher today. Well, we talked about this. If the dollar is going higher, there's not a whole lot of worry about inflation, things of that nature. That should draw down gold right now. But there's a couple articles out there today that Putin, Russia, is hoarding gold, actually trying to buy as much gold as they can, and have been trying to buy more gold than they have in the last 12 years. So they are trying to get as much gold on the books as they can. They might be thinking that this is a level where they can get some good value on that with everybody kind of rushing to Bitcoin and things of that nature. I'm not really sure why they're thinking that, but the fact of the matter is, the headline news story is that gold is being hoarded by the Russians. All right, on to Bitcoin futures right now, just below 9,000, just off by a couple hundred points. As you can see, it did go up and test this 23 Fibonacci level this morning. Did fail. That being said, this is, they tried to get a little bit of a corrective pattern going here, got the tweezer tops, and is kind of failing right now. So, this could be even maybe, never mind. I'm not going to even, that's not what I was going to think of. I thought I was seeing something in there, but I'm not going to talk about that because I don't think it's right. Anyway, failing there, still very bearish on Bitcoin as of right now until that pattern changes. VIX is coming off, no more 20s, back into the 17 handle. And that's basically because we're starting to see equities get a little bit of a lift here with the Dow Jones Industrial Average up 130 plus points right now. Again, similar situation where it's coming up against this trend channel that we were starting to draw here. We could also probably draw in a flag pattern here. Let me see if I don't have the drawing up right now, but we could probably start throwing in some flags around most of these charts as we're starting to see these markets kind of make these moves. And again, I don't usually do this, but you can see that it's kind of looking like a flag pattern. If I kind of drew those in there, I could say that it's a false breakout flag to the bottom right now if it gets back up into this area. So that's what we're seeing across the board, most of the equities anyway. And the NASDAQ slightly in positive territory. It was unchanged just a couple of seconds ago, up 3 points right now, which is nothing really to write home about. Just pretty sloppy pattern. It is back inside this trend channel that if I can extend this without messing anything up, let's see if I can extend to the right here and get that pop. There we go. We've got that trend channel extended out, running right along with the 50-day moving average. Again, same situation. It looks like it wants to just kind of trudge to the upside. That 50-day moving average is going to act as support. Onto the E-mini S&Ps. All of these charts look very similar where you could, some people could draw this chart up where we had the trend channels touching and it looked like a false breakout to the upside from a while back. So some people have been drawing their trend channels where their flag patterns where they kind of drew them like this. And then, picking the bottom here, kind of just trying to pick some major support areas is what I like to do. So you could say that this was a false breakout to the upside, came back down in. Now we're starting to peel back above that. I don't think that chart is good any longer. So I would be one to say let's remove that chart because this actually looks a little bit more of like a flag pattern setup. I'd like to see the bottom a little flatter for a breakout to the upside, but you can see that we are kind of winding up a little bit tighter and tighter and tighter. That's where you start getting those breakouts. So I don't think that we've really felt that breakout yet. I think that this is the proper placement of that upper flag band, if you will. All right, on to the E-mini S&P daily chart with the 30-minute candlesticks. Right off the open, we kind of consolidated. It was pretty boring. It looked like it was going to be another inside day. And then lo and behold, after some of that economic data, especially the crude oil inventories and the existing home sales, gave a lift to the overall equities. And now we are very close to the highs of the day. Just threw up this S&P chart because it was an old one, and I had drawn this trend or this flag pattern to touch this top side, and I think that that's kind of done at this point. I think that the real pattern is that it's bounced around inside of here, and this is going to be the real flag that we're looking for that a breakout to the upper, the downside. On to Procter & Gamble. Procter & Gamble is getting beat up because of, and I took this trade off. I'll just talk about taking off this trade real quick because it was, I'll just say, General Mills came out with earnings last night and they matched on earnings. Okay, so I think their earnings were expected to be about $100 or $1.79, let's call it. I think it was $1.79, and they came out with $1.70, or sorry, just 79 cents expected. Came out at 79 cents expected. Look at this drop. You would think that it wouldn't have been beat up that bad, but for one, there's support here, and they came out with some bearish news that some of their cereal brands is going to be about a 1% pullback on their overall gross income. So that being said, cereal is kind of losing its luster with the morning breakfast of kids. And that being said, that 1% forward guidance on the pullback in cereal really crushed General Mills. So for that reason, that's going to hurt Procter & Gamble because they're in the same space. That being said, as soon as it got below this, I talked about gets below this wick, I'm out. I pulled the ripcord on this. I think it's going to continue that bearishness. I thought this might get that little bit of bounce if we had something, but with the bad news out of General Mills, it's not going to help Procter & Gamble. So I pulled the ripcord on it. If you guys remember in the April on my margin account, I sold the 75 puts in there for 46 cents, bought them back for 72 cents this morning. And then in my IRA, I did it as a put spread, synthetically short those same 75 puts. In the April, I sold the 75 puts, bought the 60 puts to define that risk for a total collection of 41 cents. I covered those just 75 puts for 71 cents. So somehow I put my IRA in first and got a better fill, and hurt me by a penny in my margin account. But anyway, that being said, I'm out of those. I still have on the long 60 puts for Procter & Gamble for, if anything really crazy happens in the next 30 some odd days, which I don't really expect. But just going to leave it on just like I normally do. It's not really any sense to cover it for a penny at this point. All right, Facebook. Keeping an eye on this one. I just wanted to talk about it because there's a lot of stuff going on in here. There's, the DNC scraping Facebook and being allowed to do that. Facebook and the Russians, Facebook and Cambridge Analytics, Facebook and just about everybody. Bad news across the board. Facebook is Zuck's supposed to come out and talk to his users in the next 24 hours to try and stem some of this anguish that people are worried about. Hey, my data is just getting stolen. Well, yeah, your data is getting stolen, but is that any worse than Zuck stealing your data and selling it? But it's really the same thing. It's your data. It's not anything really new out there. It's just who's paying for what. All right. So anyway, and if you want to cancel your Facebook account because you don't want him stealing your data, he's already got it. He's already got data on people that don't even have Facebook accounts. So not going to happen. Anyway, pushing up against the 200-day moving average. I'm really hoping that this is not a bottoming pattern. One would think that once it gets above here that it is a confirmation of a bottom. But I'm going to hold out on this a little bit longer. I think that this is probably some retailers really trying to just get in on Facebook where they think it's a good value. And I think it might start rolling over just a little bit. Even the person that bought WhatsApp or sold WhatsApp to Facebook, Facebook made a millionaire, is saying you should delete your Facebook accounts because they are just thrifting all of your accounts. And Boeing, not really sure why I have that chart up there, but Boeing, I've done nothing in. And that's about it. So the only thing I've really done is taken off Procter & Gamble, keeping a real close eye on Facebook because I am Delta short in there. So going to be hoping for at least a little bit of peel back over. I'm going to be keeping an eye on that one pretty close, kind of like I did with this Procter & Gamble, especially now that with yesterday's action, today's action, it's looking like it could be a bottom. But I'm going to hold off one more day or so just to see how this all plays out. So that's it. Friday's webinar is going to be on the strangle, so check that one out. It's going to be a real great strategy for low implied volatility, and when you're expecting a breakdown, or a breakout, like when we were talking about with that rubber band tightening up, maybe one of those flag patterns is bumping up against a certain resistance area, and once it gets out of that, then it's going to take off to one direction or the other. If it's a break of a support or a break of a resistance. All right. So we're going to talk about when and where and how to set all that up in Friday's webinar. So go check that out. If you can't take that, take it easy.